Hello everyone, Jeff Green here again with another market timing, market analysis update in preparation for the trading week 6 that starts on February 7th. So please, if you'll just take just a quick second and hit that like button, that would help me out greatly. And let's talk a little bit about what happened over the last week. It was quite volatile, as we talked about, to expect on the week before video. There's a couple of items that struck me this week. Was the jobs report on Friday. The government reported that 467,000 jobs were added in January, which was good news for people who watch that sort of thing. Frankly, to me, I don't care what they say because they obviously can't keep track of it because in that same announcement, they also announced 790,000 job revision increase to November, December. It was either 709 or 790. That's almost 1 million jobs that they revised. Gosh, that's a big number. So it's clear to me that the government really doesn't have a clue what's going on with the job market. But the point is that a lot of people react to it. And that sort of news can be good and bad. Job increases are good in general for the economy. More people are working. Hopefully we'll get our supply lines back the way it was a couple of years ago. But the bad part of that is that it puts a pressure on the Fed to increase interest rates even faster than they've already announced. And you know that we're on the borderline of hyperinflation, so increased interest rates are bad for earnings. Even though earnings are continuing to go up, in most cases, besides the Facebook debacle of last week, I think that's absolutely insane, but markets do what markets do, and people run the markets, really. But getting back to earnings, FactSet, which really tracks earnings announcements, have reported that over 50% of the corporations have announced their earnings, and of those 50%, about 76% of them beat earnings, and about 70% of them beat on top line revenues. So earnings still appear to be going up, but I think what's happening here is that in the majority of cases, the upper management in these companies want to protect themselves. So in the forward-looking statements that also come out with the earnings, they say, yeah, but we face a slowdown because of this, that, and the other thing. And that's, combined with interest rates and hyperinflation is a too big or a handful of big headwinds on market performance. So this week I'm going to look at two charts. I'm going to stay with the old and familiar VTI ETF, which is the broadest market ETF out there. And on the left of this screen that you see here, I'm going to look at EUSA, which is a equal weighted index of the stock market. And the reason I like to look at EUSA, I think I've mentioned this in a couple of posts back, is that these indexes like the Dow and the SPX and the NASDAQ are fabricated numbers. To me, they're fabricated because they overweight either large capitalization stocks or stock prices. So they give you kind of a blurry picture of what's going on. And VTI certainly is an indexed ETF, but EUSA is an equal weighted index. So let me get a pen out here and we'll just sort of jot through these real quick. So my assessment is that these markets are bordering on a big downdraft. And let me show you why. First of all, on both these charts, I have, several weeks ago, I drew this downtrend line above where the prices are. And there are several other things in here that make me real nervous about the market. First of all, we've got these big red clouds in front of us. If you know anything about Ichimoku charts, which I favor, these have a predicting quality about them. When you see these charts turning red into the future, you can assess the market as being a bearish sort of market. And keep in mind that these are 26 days ahead, right? So this turned red right about in here where you should have been getting out of the market. That was really your last chance to get out and stop the rot. The Dow in January is down 3.5%. The S&P is down 5.3%, but the NASDAQ is down a whopping 9% in January. So A lot of people say as goes January, so goes the year. If that's true this year, then it doesn't look very good for 2022 stock prices. But let's just go through the analysis here. So on the EUSA, we still got to get above this trend line. There's no doubt about that. We've got to close in this area somewhere at some point in this area on VTI. Until that happens, I don't think we're going to see a very strong uptrend. We're sort of building a triangle here. We've got overhead resistance. So sooner or later, these triangles will resolve themselves either up or down, right? So if you go up this way, we'll be good. If we get below these support lines though here, I think we're going to see a very violent move to the downside. There are a lot of traders that are now underwater, especially on tech stocks. I wrote a post that evaluated growth versus value stocks, and growth stocks, which are highly sensitive to interest rate increases, and they're mostly concentrated in the tech sector, which is NASDAQ, which is why you're seeing the NASDAQ in such a drawdown. So there's a couple other things to watch for here. Anytime the MACD resides below the zero line, you can sort of expect a bearish environment. We've got the unbalanced volume, which is still not above the longer term trend lines. Although it's showing a little bit of strength here from this bounce, I'm not convinced that this is going to continue yet. The advanced decline line, unfortunately I got the advanced decline line on New York Stock Exchange on both these charts, but if you look at the advanced decline line on the NASDAQ, it's shockingly bad. And we still don't have any indication from the ADX DMI things that the trend is getting better. So what are we looking for? Let me erase this stuff and I'll tell you what I'm looking for. I'm watching the VTI, like I mentioned before. It's got to close above this trend line. A good thing here would be for this pullback here to sort of resurge back in this direction, and in so doing it would create a higher low. That would be a good indication for Monday or this week. A close above here would be another strong indication. But if we continue down here, I'm hoping that we might get a bounce here. Like I mentioned before, if we get below here, especially, I'd be looking to take positions in contra ETFs. And contra ETFs go up when the market goes down. So if you don't have a margin account, you can't go short unless you have a margin account, and you specifically can't go short in an IRA account. But you can go long in contra ETFs. And if you want me to give you a talk on the contra ETFs that I'm looking at, you can send me an email if you would like. So let's get rid of these markings. Let's get rid of these charts, and let's take a look at this week's top stocks. As you know, I'll show you where you can get this list if you would like it. If you'll notice, Apple was on last week, but Apple is not on this week, and that was because of the pullback. So let's do this. I'm going to sort this by industry. Give me a second here, and I'm going to sort. Where's my sort? Data. Sort. I'm going to sort by column. Industry here, and let's take a look at the stocks that are, or the industries that are on this list. So what jumps out at me here again is healthcare providers and services. They're a defensive sort of position, defensive being less subject to downdrafts in the market. Insurance is the same way. For example, you don't stop going to the doctor or stop insuring your cars when the economy gets bad. That's sort of what the philosophy is there. But here again, oil, gas, and consumable fuels, which is everything from oil and gas and things that come out of the ground, fossil fuels, are just going up like you can't believe it. These started appearing about a month or 6 weeks ago, and that certainly was the time to start focusing on this industry. So let me show you, let me close this, and I will show you where you can get you can go and download top stocks list on my website at profitableswingtrading.com. Right up here. And at this tab here, I publish every week the list of top stocks. So you can go and get that list. You can download it in Excel format, or you can download it in a PDF. And also on this front page here, the stock market analysis, you have access to all these videos that I produce, and you can go back in time and measure my accuracy on what I think the market's going to do with actually what it did. So I hope that helps. I hope you have a great week trading, and we'll talk to you again next Sunday. Thank you.